Hey everyone, this is Jay Soloff from Investors Alley, and this is our options trade of the week. So before we get started, I want to remind you that this is not a trade from one of my trading services. This is a trade that I am showing for educational purposes only. So with that being said, we are at marketchameleon.com, and today I'm looking at their block screener. So what I want to show you is, if you're interested in finding certain types of trades, which either you want to research or potentially emulate, one thing you can do is use a block screener like this. And for this example, I'm going to look at a potential covered call trade that I might want to do. So I sorted this by stock contingent. And what that means is a trade that is tied to a stock. So these option trades are all done at the same time as a stock trade. Now those are not just covered call trades. You could do any sort of trade tied to stock. Covered calls are one of the more popular ones. There's also such thing as a covered put. There's a married put, which is basically buying a stock and then buying the put hedge at the same time. So there's all different sorts of things. So for covered call, typically, first off, you obviously want to find a trade that's a call. But then you also want to find it where the trade occurs pretty close to the bid, where it appears that the person is selling the call. That's how we know it's a covered call. Opening trades are always good. So if you see an open interest area here, you can see this is 489. You're selling 4,000. So this is a new trade. So that happened to be a put trade, but just giving you an example. So looking through this list, I'm looking for more of a traditional covered call. And so here's one that's kind of your standard covered call trade to try to increase the amount of return you're getting from an ETF or a stock. And so we're looking at EEM, which is Emerging Markets, super popular ETF. And you can see that this call looks to be sold about 45, so a little bit closer to the bid. So for 45 cents, this call is being sold at the 55 strike in January of next year, with the stock at 51.25. All right, so let's talk about that a little bit. What does that mean? Well, by selling at the 55 strike, you have $3.75 of upside, which is a fair amount. But also you're only getting about 45 cents, which is less than 1%. So you might be saying, well, why would you cap your potential gains and be getting less than 1% in the course of 3 or 4 months? All right, well, let's look at EEM and we can give you a little bit better idea why someone might be making this trade. First off, so this is the last 3 years. You could see the highest it's been is about 57, and it was only there very briefly. So it hasn't really gotten above 55 and stayed there for really any length of time. So the chances, based on historical price movements, that this goes above 55 and stays there, just based on historical data, which obviously is only somewhat useful. You can't predict the future, but based on that, it doesn't seem like there's that much upside above 55. So if someone believes that and they want to hold the stock, the question is, why not get paid a little bit extra money, even if it's only around 1% on return on cash, and so because you're still giving yourself this upside up to 55. Plus, you also get the dividend. Now, if you just hold the stock and get the dividend, you're getting less than 1% for the whole year. So by getting around 1% for 3 or 4 months, you're significantly increasing the income you're getting, the return on cash you're getting from this fund. So you get the dividend as well, which is another 24 cents. So you're getting 45 cents. You're getting December 13th dividend by holding this for another 24 cents. Plus you have upside potential up to 55. So this is a way to pretty quickly retreat and easily increase your return on cash without giving up too much upside potential. So I think this is a standard good covered call trade to do to add a little bit return to your portfolio without giving up that much potential upside. So if you're interested more in trading options, I have a service to help you get started with buying calls and puts called Option 4 Trader Pro. There should be a link on this page that you can check out. Other than that, I will see you soon.